Small businesses of any size can benefit from working with a bookkeeper. Bookkeepers carry out essential duties that keep the business running smoothly, ensuring your business can comply with different laws, policies, and regulations, especially when it comes to payroll, account management, and taxes. There are various aspects of small business management that benefit from bookkeepers' hard work. Here's an overview of the 7 things a bookkeeper can do for your business. A bookkeeper has many duties to make sure your small business complies with federal requirements. On top of these 7 main duties, bookkeepers must also stay up to date with other bookkeeping components of their job. The first thing that a bookkeeper does focuses on reconciling bank accounts. There are 4 steps to bank reconciliation. First, bookkeepers will choose their method for reconciliation based on how your small business tracks its money. They may use accounting software, mobile apps, or a spreadsheet to track transactions. Next, the bookkeeper will compare deposits. This allows them to examine personal transactions to your bank statements. They'll do this to ensure all deposits on the bank statement are also in your personal records, to check if the deposits in records are also present in your bank statement, to adjust records to reflect your deposits as needed. The third step to reconciling bank accounts is to compare withdrawals. They'll compare personal records to the bank statement to make sure withdrawals are on both records. And finally, a bookkeeper will look for bank adjustments. If there are any bank adjustments, they'll record the adjustments in your personal records. Bookkeepers also manage accounts receivable. Accounts receivable is the money a customer owes a business for its goods or services. A bookkeeper will record accounts receivable in the general ledger. On a balance sheet, they'll report accounts receivable as a current asset. One of the major aspects bookkeepers manage is accounts payable. Accounts payable is the debt owed to a business, supplier, or vendor. Bookkeepers manage accounts payable by categorizing data in a chart of accounts, including vendor purchase information in accounts payable, understanding payment methods and terms, checking invoices for accuracy, processing payments, and recording payment information in the general ledger. Invoices are useful during the accounts payable process. Bookkeepers will use information from an invoice to note the products or services a third party provided. For accounts payable, invoices may contain contact information, cost, payment terms, product or service provided, and the purchase order number. Bookkeepers are also responsible for preparing your financial statements. Financial statements are useful not only for small businesses, but for potential investors. Financial statements detail 3 aspects of your small business's health: the balance sheet, the cash flow statement, and the income statement. Bookkeepers will use the balance sheet to provide information about your small business. The balance sheet is a formula of assets equaling the total of equity plus liabilities. The assets should equal the total of liabilities and equity. The balance sheet only provides this information from the date on your balance sheet, so it won't provide a more detailed overview of your small business's health. The second component of your financial statement is the cash flow statement. A bookkeeper will form a cash flow statement to see how your company conducts its operating activities, investing activities, and financing activities. The third part of the financial statement is the income statement. An income statement can cover a longer time span, such as annually or quarterly. To calculate net income for the income statement, a bookkeeper will total all revenue for the period, total all costs of operating business and all expenses, subtract the total expenses from the total revenue to determine net income. Processing payroll is the 5th responsibility of bookkeepers. There are distinct steps that occur during this process so bookkeepers can pay employees and document necessary changes. These steps include checking employee records and making adjustments if necessary, determining hours worked during the pay period, processing wages, direct deposit, and paychecks, processing deductions, reporting payroll to comply with Fair Labor Standards Act. When it comes to maintaining detailed records, it's essential that your bookkeeper can record financial transactions accurately. They'll record transactions in a journal or using software and track them with single entry or double entry bookkeeping. Documentation from previous steps, such as an invoice, purchase order, or receipt, is also useful for recording financial transactions. Your small business accounting method may affect how and when your financial transactions are recorded. The last core duty of a bookkeeper has to do with tax compliance. All businesses must comply with employer and federal requirements. A bookkeeper can work with you to make sure your small business is complying with tax requirements. If a small business doesn't adhere to tax compliance rules, the IRS can audit a small business's books, and they can review taxpayer records during audits. This audit can last from a few months to a few years, so a bookkeeper's help may be useful for you. This is one of the most common questions we hear, and it seems there are many misconceptions about the responsibilities of both roles. The differences between bookkeeping and accounting can be found in job duties and responsibilities. Accounting provides analysis and insights about small businesses based on bookkeeping data. Accounting is comprised of adjusting entries, analyzing and verifying data, generating reports, performing audits, and preparing financial reporting, helping business owners understand their financial decisions, and providing forecast information, opportunities, and trends for growth. Bookkeeping, on the other hand, involves recording financial transactions. Bookkeeping is comprised of balancing and maintaining accounts and ledgers, managing payroll, posting debits and credits, producing invoices, and recording financial transactions. Bookkeepers play a big role in small businesses. Their work creates a foundation for you to meet multiple requirements and comply with tax regulations, and allows you to focus on your business and its success. When your business needs help with bookkeeping, make sure you work with the bookkeeping experts. Work with the pros at 1-800-ACCOUNTANT.